Now, Zero DTE, in a generic sense, applies to all options. But from a trader's perspective, when they hear Zero DTE, they think about trading options on the S&P index or the E-mini futures on the very last day of expiration. And of course, Zero DTE as a more generic term is the last day of expiration of any options contract. Most options have monthly contracts, and we all know, if you're into options, that the time premium is a big portion of the value of an options contract. What really supplies a lot of the wonderful things that you can do with options. It can work against you or it can work for you, depending on what side of the buy-sell equation that you're on. But that premium is constantly decaying as time ticks away on the options contract at an exponential rate. Now, in the beginning of its lifetime, it's going super slow. And then in the last waning days of most monthly, and then the last day, it just is going really, really fast. Now, if you're long an option, that means the value of your option is decreasing. So you have to make sure that you're going in the right direction so that you can capture, hopefully, some intrinsic value in your option. If you're not, then the only value you have is time value. And time, as it ticks away, that value goes away exponentially. Now, as a seller of an option, you're on the other side of the deal. You're collecting that premium. You sold that option to the long buyer, and you have an obligation, make delivery upon the terms of that. And the buyer of that option has right to take control of what is supposed to be delivered for that option, which is, for most things, it's a stock, right? For the SPX, there is no underlying stock or anything like that, the index, because it's a calculated index. So the only delivery there is actually an exchange in value. So it's cash settled. That's a neat thing. That's something that puts the SPX in a very nice position from a trader's point of view, because they don't have to deal with all the messiness of handling 100 shares of something or a futures contract. It's just, hey, here's the value. Either you debit or credit your account. So what most people like to do with options on the SPX is they like to trade that very last day. I guess you would say net short those options. Net short meaning that you're primarily looking to collect premium from that strategy. And there's a number of different types of strategies that you could play that are really well designed for collecting premium too. So things like a straddle or a strangle or a butterfly or an iron condor or a calendar spread or a diagonal. Any of those are uniquely designed to take advantage of the premium that is decaying. And if you're in the right spot, you can collect that. The cool part about the SPX or any kind of derivative that you can trade options on the S&P, such as the SPX index, it's a little child, the XSP, which is 1/10 the size of the SPX, or the E-mini S&P futures contract. Not only do they have monthly options, but they also have weekly options. And unlike most weekly options that only expire on Friday, they have weekly options that expire every single day of the week. So now you have this rather unique opportunity to be able to play that exponential decay 5 days a week. So this makes it particularly well suited for a day trader.